Good afternoon, everyone, and welcome to Stock Market Today by Investors Business Daily. It's Wednesday, September 8th, and I'm Justin Nielsen, joined by Ed Carson while Ali is on vacation. And on today's show, we're going to be taking a look at the stocks retreating and the overall indexes, kind of pulling back a little bit here. We'll also take a look at Domino's in the restaurant industry, also Crocs in the shoes and apparel, and then finally Shopify. We got a couple bounces, and then we've got something that was not looking great, not getting support at its 50-day moving average line, and that is Shopify, along with a lot of the other enterprise software stocks. So Ed, do you want to just kind of maybe pull up the indexes and we can take a look at a little bit of what happened in the NASDAQ? A lot of economic data was coming out. What was your take on the action today?
I mean, there was a little bit of economic news. One of the more hawkish members of the Fed, who doesn't have a vote this year on FOMC decisions, but St. Louis Fed President James Bullard was saying, hey, we should still go ahead with tapering there at the end of this year. There was some hope or expectation that maybe that'd be pushed back a little bit because of the weak jobs report. But, so this was a hawkish member just saying he'd like to do that. Doesn't mean it will happen, and doesn't mean it'll happen at the September meeting. We also had Senator Joe Manchin, one of the centrist Democrats, basically saying, I don't want this $3.5 trillion bill President Biden and the leading Democrats are talking about. I'd like a lot less. And so it's just suggesting that maybe there'll be, some pullback on stimulus that people didn't want. But, look, the NASDAQ bounced off its 10-day line. It's hard to get, while there's some concerns about the market leadership being sort of narrow, there's some issues, maybe not a lot of buying opportunities, but it's also hard to get really upset at the market action.
Right. A lot of the stocks have been doing phenomenally lately. We've been talking about how FFTY recently got to new high ground. That's pretty representative of growth stocks. It represents the IBD 50, again, filled with growth stocks. That had a little bit of a rough day today. You can see that was off its lows, but did close in the lower part of the range, down quite a bit. Now, the small caps, we've been kind of keeping our eye on that. And if you pull up IWM, which is the iShares Russell 2000 ETF, that was probably hit the hardest. That was down 1.11%. After getting back above its 50-day moving average line, is there a concern in your mind with small caps and whether that risk on, risk off is kind of shifting again?
Yeah, I mean, maybe temporarily. I mean, I think you got to be thinking with the market's run up a fair amount for 3 weeks, and some of the leaders or the market leadership is narrowing, and there's not a lot of buying opportunities. It sort of feels like maybe investors should take, at least on a very short-term basis, more defensive. There's not as many buys, and maybe thinking about, well, may just be automatic. You're selling some losers and maybe trimming some winners just because they're getting extended, or you just want to lock in some gains, and then you don't add anything, and that reduces your exposure, even if you don't really mean to be heading to the exit. You're sort of like slowly backing away. Just, it may turn around in a couple of days, but I think in the very short run, that's probably what investors should be doing.
And we might as well also take a look at the S&P 500. That was down just a little bit, about 0.1%. The Dow Jones Industrial Average was down about 0.2%. Again, the S&P 500 well off its lows. The Dow has been struggling a little bit more, whereas the S&P 500 and the NASDAQ have been making their new highs. The Dow wasn't, and now it looks like it's pulling back to the 50-day moving average line.
Yeah, so there's that. We know that industrials, we know that a lot of commodity plays, housing, they all had a tough time the last few days. There's still, even now the Dow isn't that far from all-time highs. Just have to keep in mind. But there's sort of a pullback outside of those tech giants and maybe some of those high-flying IPOs.
Right. So a lot of the hot growth names may have been getting a little bit of a pullback, but again, as you put it in that perspective, look, the NASDAQ is only at the 10-day moving average line and getting support at that. But if we go ahead and turn our attention over to Domino's, and the ticker symbol on that is DPZ, here's a stock that seems like it's been getting support at its 50-day moving average line and had a decent bounce. This was our stock of the day. So Jillian Rich did a nice article on this, breaking a downtrend, getting support at the 50-day moving average line. What is it about restaurants that are something to be noting here?
Well, not necessarily restaurants, but maybe the delivery or the ones, the fast food or fast casual that are, suited for delivery or pickup. Because with COVID cases coming up, these are probably the restaurants that are going to do well. This had pulled back after an earnings gap up, but nice bounce today. We sort of set, in the stock of the day, 521.08 as the buy point, but that was off of Friday's high, but off the 50-day line, off this downtrend. You could say that it was in buy range anyway right here. Not a lot of volume, but this is maybe a place that you could start an early entry, at least start a position instead of waiting for it to get all the way up to those highs.
Right. And we've been talking a lot about these early entries kind of giving you a little bit of cushion by the time it gets up to the old highs. And in this case, as you mentioned, that big gap up on earnings, big move on earnings, it held the majority of those gains, which is pretty impressive. So again, if we can kind of move higher and I guess continue where it got to on that earnings report, that could be good. Now, this is a slower mover. It's one that doesn't tend to move as much. So some people can look at it and say, gosh, this is just like watching paint dry. But if you look at that monthly chart on Domino's, this is one that was the poster child for the long-term leaders for a while. The relative strength kind of started falling out of its trend, but it's certainly one of those where you're amazed at the end of this move how much it's gone up over the years. And again, you look at the daily and it just seems like the slowest thing in the world.
I will also say that, while this is not a long-term leaders, as you say, it does have a lot of those traits. Mm-hmm. And also you could argue that there are some other long-term leaders that are doing well, whether it's IDEX Labs or Pool or Microsoft, all of them are trading pretty nicely. So long-term leader stocks, some slow but steady stocks, it's nice to have that's something in your portfolio. Maybe not all of your portfolio, but right. It's nice to sort of leaven that off, have a little slice of pizza now and then.
Yeah, and as you mentioned, the beige book came out, and so there was a little bit of a slowdown with coronavirus, and so certainly in the restaurant area, Dash was up today. CMG, that's been flat. But you do have a lot of those that benefited from the coronavirus crash. It seemed like those were, kind of catching fire again, possibly. Let's go ahead and turn our attention to Crocs. CROX is the ticker symbol on this. Now, whereas there's other members of the restaurant group that are kind of showing some decent action, Crocs really sticks out in its group. This one got a strong bounce off of its 50-day moving average line. This one really didn't give you much of a chance to get into it. It just really had a nice steady move. Bounced off the 50-day moving average line a couple times, but not much of a pullback in those cases. So what's your take on Crocs here?
Yeah, it's nice action. It's one of those tricky things because to me, it's like, yeah, you want to get in early. And then at the same time, I like it to be above the 21 day. Mm-hmm. And it's sort of a tricky back and forth. I was commenting before, just back and forth, like some other of these hot apparel, shoemakers or athletic apparel or retailers, some of them have struggled, though I will note that at least initially, Lululemon is having a nice pop after hours. They had earnings tonight. And obviously, Crocs and Lululemon may not be exactly compatible, but that sort of trendy kind of situation that had been falling back. A lot of these stocks have been falling below their 50-day line. Crocs did not. It'd be really encouraging to see if Crocs can do well, if Lululemon can do well, get this sector back on track.
Yeah, and certainly if you do see more weakness following the indexes, you do want to pay attention to the stocks that are holding up. Now, unlike Domino's and Crocs, one of the stocks that wasn't holding up nearly as well is Shopify. This one has been a little bit trickier. We've certainly seen some weakness hit the computer software enterprise group this past week here. This has been an area of a lot of high flyers, and it seems like Shop keeps on teasing a little bit like, hey, I'm going to give you a bounce, an early entry off the 50-day moving average line, and then it just seems to turn tail. So was there anything happening this time that investors could learn from?
I don't really know. It's just been a real tough couple of months. I'll be honest with you. This one has given, as you say, a lot of head fakes. I could have drawn a whole bunch of others,
right?
that it was doing head fakes on.
You can just look at my portfolio if you can.
But there's a lot of other stocks, like there's some others like CrowdStrike or DocuSign. There's some others out there that have had somewhat similar kind of action where they rebounded nicely off of these early entries, and for the most part, they've held above that. But ever since getting to highs, they've just been really tricky. And, just by the nature of it, you're probably buying off of strength and then quickly rolling over. So that makes any additional buys up here difficult. Like if you bought here looking good and then reverses lower, and now, now down significantly from that position. It's just, maybe this will set up again. It's still in a base, it's just in a flat base. It's not terrible or anything, but it would be nice if it could just, maybe it needs to pause for a while. It keeps on trying to go when you're not ready. It's sort of like, I get injured all the time now. And it's sort of like, well, maybe I need a bit of a rest. And it's like, no, I'm good. And I'm good. And then it's like 2 days later, it's like, I'm not good. I got to go back. And so I feel like that's how some of these stocks that have been on runs is like, they just need to pause for a little bit and not let you and I say, let's go.
Right. And certainly, again, in comparison to the two stocks we looked at before, Domino's and Crocs, that were closing, well in the upper part of their range with gains even, the fact that this was a much larger loss than the indexes and closing at the lows, whereas again, a lot of the indexes were coming off of their lows, whereas some of these computer software enterprise names were closing near their lows, and in this case, breaking support at the 50-day moving average line. Now, of course, this all depends on where did you get in. If you got in, if you look at the weekly chart and you have gains from, maybe even back in the coronavirus crash, you pulled this out in April, this shouldn't bother you at all. But if you were doing any of those recent entries, you might be having to take some, as you said, defensive action.
Yeah, I mean, it's just all about, it's just about positioning and a little bit of portfolio management, tough times. I'm sorry to step on you right there.
Hey, not at all. Well, that's going to do it for us today. Thank you so much, Ed, for your analysis, and thank you for joining us. Don't forget, if you have not checked us out on IBD Live, Ed and I are both panelists, along with a whole host of other great panelists and special guests. This week, we're going to have Matt Caruso on from Caruso Insights. He's going to be joining us on Friday. So if you want some of that analysis happening during market hours, we start 10 minutes before the open and go a full hour plus after the market opens to give you some analysis of how things are looking in real time. So I hope you join us for that. You can find it at www.investors.com/IBD Live. Otherwise, we will see you right back here tomorrow for the Stock Market Today video. Thanks for watching.